Hello smart money traders, welcome back to the channel. Let's quickly do a top-down analysis on the dollar index to determine the weekly bias or directional bias of the dollar, and then we're going to do it on GBPUSD because GBPUSD is basically my favorite pair, but you can use it on any dollar paired currency, your favorite dollar paired currency, or any asset that is directly related to the dollar. So let's get into it. What exactly is a dollar index? The dollar index is basically the indices that determines the strength and economic strength of the United States dollar, and we use that because the dollar is the benchmark for all foreign currencies. That means if the dollar is bullish, we will find out that foreign currencies are bearish, and that is why we need to do this. So let's get into this top-down analysis. I'm going to be very brief on this because this will help us to know exactly what the institutions are trying to target for the week and where there is draw of liquidity, or where the liquidity is basically residing. So let's get into that. Now, starting from the monthly time frame on DXY, you can simply find the dollar index on TradingView. Simply type DXY and that is where you're going to get it. So we'll start from the monthly time frame. What we see from the monthly time frame, if we scroll down, we're going to see back to the past data. We're going to see that price have actually traded from here. This is where price have traded from all the way to this level and actually reached out for this bearish mitigation block, and that is exactly where price started expanding to the downside. So we have basically seen why price have been coming down from that level, and we've seen that price have done a bearish movement for a while from here. Let me just delete this guy so we can have a clear chart. Price has been coming down for almost 4 to 6 months. You can see these bearish candles that were printed, and look at what happened. Now this is why we need to look at the most recent data. Now the most recent information we have is basically where we see price traded above this level, and then it moved to this area, entered that bearish mitigation block, and now it is expanding downward. Now we take our Fibonacci tool to know exactly where price is from here to here. We know that price is at this particular discount area. Above this 50% level is what we call premium, below it is what we call discount. So price is currently at a discount area for the meantime. Now look at what happened at this discount. We've seen the most recent institutional reference point, that is a fair value gap, and then price have traded into this fair value gap. That is where we've seen some reaction on price right here. Now price have traded here and then bounced back to this particular volume imbalance. Let me show you a volume imbalance right in between this guy and this guy. What exactly is a volume imbalance? A volume imbalance is basically a price action that involves only the wicks of the candle without the body. You can see the wicks are connected just like this one. We also have a volume imbalance right there. Now this is where we got our biases. Okay, as price came back into this imbalance, started coming down again to this particular level. If price should go down completely, we're going to target maybe this place, this particular fair value gap, that is the next target, or probably to reach out to this particular bullish order block, or maybe ultimately reach out to this particular bullish mitigation block. But we can't possibly say. We just want to see price gives us indication of what it wants to do, and we follow. We don't predict price, we just see based on what price does, and then we follow what price is doing. Now look at what is happening right here. As price came to this area, for this particular month, we've seen price printing this bullish candle, and that is interesting to us because price have reacted at this particular level after taking liquidity just below this low. Can you see a small push out of this low? That means liquidity has been taken. So if this bullish candle is to go up after taking liquidity, we are going to expect price to move up above these equal highs. Can you see these relative equal highs above here, and then ultimately reached out to this particular sell side imbalance, buy side inefficiency. As you see price push down to this level, there is a very large fair value gap right here. Maybe it goes to halfway the fair value gap, which we call consequent encroachment, or maybe reach out to this particular volume imbalance. But we want to see price gives us that before we do anything bearish from that area. So that is what we're seeing from the monthly. Price is showing us willingness to go bullish. Now let's drop down to the weekly time frame and see what is happening on the dollar index. Now we are not going to trade the dollar index, but we want to know exactly what is happening to the dollar because that is our benchmark. It is important that we do that. So from the weekly time frame, this is what we are seeing. Let me just give us a clear chart. Look at what happened. Price actually came below this level and traded and grabbed liquidity here, and price have shown us willingness to start going up from here. What we see right here, if we measure from here to this level where price swinged from this level to this level. We want to see price go back to premium and then give us some indication of willingness to go down if price is going to go down. But for now, since we are bullish from the monthly, we want to see price trade into this particular order block. This is our point of interest, and then close to this particular bearish order block we have this particular fair value gap. Look at it, a fair value gap here. So this is where I think price is trying to reach out to. As price gives us what it wants to do, we just follow through and see if we can see that. But right here, if you look closely, you're going to see that last week was a bullish week for the dollar, and we have taken liquidity just above this high and probably above this high. All these highs were going to be taken out, and price may probably push up above to give us interesting levels to take a bearish trade. So we are looking at this from here as price prints. Let's see what the week unfolds, and we drop down to the daily time frame and see what exactly we have from the daily time frame. Let me just give it a more view so you can see. So look at what is happening from the daily time frame. Now look at price. If we take out these highs, we're going to go bullish for the meantime. So after price have grabbed liquidity just below this old low, now we're seeing some kind of a bullish movement reaction coming in from here. Let me just show you that properly. Just above here, we have just broken structure right above here. Can you see? This is a market structure shift. Let me just give us a titled line, a market structure shift, or what we call a change of character. And after a change of character, what do you expect price to do? A possible movement in the direction of that market structure shift. So right here, we can see a bullish order block right here. This is a bullish order block, and then what is interesting about this particular bullish order block is that we can see a fair value gap that is an imbalance right close to it. So if price is giving us this kind of sign, we want to see price come back to this institutional reference point and then give us a very good trade to take before expanding to external range liquidity. So we are basically expecting price to come back to internal range liquidity, which is this fair value gap and this bullish order block, before we take out all the highs that we have from the daily. All these levels is where liquidity is residing. These levels, liquidity is residing. Just look at these areas, liquidity is residing, including all these imbalances, volume imbalance at this level. Look at this. This is a volume imbalance right here. This is a volume imbalance. So all these are areas of interest that we want to see price trade into. So we are basically bullish on the dollar for the week. So let's drop down to the 1 hour time frame and see what exactly we have there, and then we're going to see where the dollar is headed. So this is interesting. Okay, so just like we said, just below here we have an old low, and then close to it we have this bullish order block. So if we are to see an inducement, price may eventually reach and grab liquidity below this old low and then come exactly to this particular bullish order block, so we are basically bullish on the dollar. So that brings us to go to the GBPUSD. You can use any dollar paired currency. I'm just using GBPUSD because it's my favorite, so you can use any pair. Let's go to the monthly time frame and see what is happening on GBPUSD so that you can have a basic understanding of what is happening. So right here we've seen price has been trading downward for the past few months, and then we've seen a break of structure right below this place. After break of structure, grabbing external range liquidity, we will definitely come back to internal range liquidity, which is this particular area. We look out for the most recent institutional reference point that we can find. So this is my most recent one. Can you see this particular fair value gap? This is the most recent institutional reference point that we could get a hold of, and we can see price just tested that. And then right here we have a confluence of this fair value gap and a breaker block, this particular breaker block right here. Can you see this breaker block? The confluence of this breaker block, a bearish breaker block, and this fair value gap gives us more confidence that GBP and other related foreign currencies may be bearish for the month. So we are looking at that, and then our target may probably reach out to this particular bullish order block as price gives us anything we want to see. So price may take out this low and even coincide with this imbalance right here. So we want to see price actually go bearish on GBPUSD for the meantime, but bullish on the dollar. That's exactly the relationship. If you're trading any dollar paired currency, that's the relationship. Bullish on the dollar, bearish on any foreign currency that is related with the dollar. So that is exactly what we're looking at. From the monthly, we drop down to the weekly and see what is happening from the weekly. And right here, we've seen it, guys. Price is pricing down to internal range liquidity, where we can see an order block, a bullish order block right here. We are seeing that bullish order block. So price is eventually going to trade into this area. If we trade below here, then we're going to reach out to that order block in the monthly. So that is what we're looking at from here. But we are not going to force our opinion on price. We want to see price do anything it feels like doing. Now we'll go down to the daily time frame and see what is happening on GBPUSD. So this is what is happening from the daily time frame. We have seen a small change of character right here, market structure shift, and then we're expecting price to reprice into internal range liquidity in form of this fair value gap just here. Let me show you that fair value gap right here, and then you're going to take notice of. So if price is repricing into this fair value gap, we're going to have a bullish, and then we're going to have probably the high of the week as price reprices into this fair value gap before dropping down from that level. Now we'll go down to the 1 hour time frame and see what is happening, guys, so we can know exactly what our decisions can be. The most recent data we are seeing is this from the 1 hour time frame, a bearish order block right here, and then we can see a fair value gap just here. So we are ultimately bearish on GBPUSD for the meantime, and then we are bullish on the dollar. So we're not going to force our opinion, but I want to see price do what it feels like doing, and then we follow price as it does that. If you have any question, let me know in the comments, and then don't forget, guys, to subscribe to this YouTube channel if you want to get more videos and detailed videos on smart money concept, ICT concept generally. Thank you guys for watching. See you next time.